Population shock and real estate oversupply. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. Grab your stein of coffee, let's have a look at this article from Domain entitled Population Shock to Cause Short-Term Oversupply of Housing Inner City Apartments to be the hardest hit. Now, I cannot say I'm surprised in the slightest, particularly with regards to inner city apartments. We've been talking about this for some time, just the predicted oversupply of these things. I've shown footage of where I've gone around South Brisbane here. There's been a huge boom in apartments everywhere. One of them, they were giving away, what was it, a year's free mortgage payments. You know, interest-free payments. We'll pay your mortgage for a year. That was their marketing spin. Instead of discounting the properties like 5 to 8%, they were paying your mortgage for a year. You know, brilliant. So it's smart way to turn a failure into something good, like you're getting something, but a serious example of how it's oversupplied and saturated there. So, COVID-19 has caused the largest shock to Australia's population growth since World War I, triggering a forecast fall in demand for housing of 286,000 dwellings over the next 5 years. A report by the federal government's National Housing Finance and Investment Corporation, NHFIC, predicted new housing supply would exceed new demand by about 127,000 dwellings by 2021 and 68,000 dwellings in 2022, with Sydney and Melbourne to have the largest excess supply of housing stock. And you know, this is going to manifest in apartments, guys. I bet you apartments are going to really cop it. That's the investment grade stock that people go into. It's where the international students stay. It's where people, go for short-term accommodation when they're traveling around the country, when they're going for business trips. All of these things are scaling back. So they believe the impact will be largely limited to city-based apartments. There you go. Particularly in capital cities along the East Coast. So apartments in Sydney, Melbourne, and Brisbane. I'd hate to be investing in one of those. I'd hate to be sitting in one of those, everyone. Let's have a look. Let me bring up some research here. We'll look at SQM, and we can see here's the weekly asking property prices. This is for all houses. And we look at 2-bed units. Here we go. Look at units and 2-bed units, guys. They're both trending down compared to all houses and 3-bed houses. Look at 3-bed houses. And this is in Sydney. So, I mean, what are we at now? 2-bed units are sitting at 996,000. How far back in time do we need to go to get that? Did we hit it there? Almost 2018. So yeah, we're hitting about 2018 levels, or we're back to on the way up. It would have been 2016, guys. So much for property always goes up, doesn't it? I mean, how many people have invested in these things and negative gearing them, or expecting students to stay in them, or renting them out as Airbnbs? I mean, would you get in one? Would you risk jumping into an apartment for a first home? When if you buy a house, and even if there's a correction there, you still have the land. You still have the land. You don't have the potential risk of buying an apartment with all the construction issues that are manifested, particularly in Sydney. And you've got the triangular foul there, guys. And there's still buildings with issues there. Very least, if you got a house and it's all a nightmare, you could, unless the soil is contaminated, you could demolish it, drag it away, and build something else on there. So this will probably lead to a short-term drop in rents, putting downward pressure on apartment prices in those markets. Speaking at NHFIC's State of the Nation's Housing 2021 and Beyond webinar on Wednesday, CEO Nathan Dalbon said the short-term oversupply of housing was nuanced, with record low interest rates and government incentives such as home builder and the first home owner grant stimulating demand in some sectors of the market, namely detached housing. From my perspective, there's clearly a great deal of momentum in segments of the property sector thanks to low interest rates and considerable fiscal stimulus, he said. As we've been saying, they're juicing up the market, guys. They're chucking it all at housing. This has had the desired impact of stimulating demand at a time of significant uncertainty. However, this headline story is more nuanced. For example, there are significant differences between detached houses and apartments and across regions and metro areas, he said. With international borders closed to new immigrants, including international students, Australia's total population growth is expected to reach its lowest. The border restrictions have also meant that the pandemic will result in a net outflow of migrants for the first time since '46, said the Centre for Population's Assistant Secretary, Merrick Peasley. COVID-19 has been not just an economic shock, but an Australian population shock. I was hoping that we'd have a COVID baby boom, that everyone working from home would be, well, frankly, getting it on, and we'd be having a lot of babies coming out of this, but it doesn't look like it's happened. Maybe more people are just too uncertain. We'll have to really see that if the economy turns around, maybe. Or do we get is it when the recession? Do we get a recession baby boom? We'll have to see. I know when there's a slowdown in the architectural industry, a lot of our colleagues started having babies. So, he said while the Centre for Population still expects Australia's population to grow, it's going to be 4% smaller, or 1.1 million fewer people by 30th of June 2031 than it would have been without the pandemic. First home buyers will have also been boosted housing activity by taking advantage of low interest rates and government stimulus, accounting for more than 40% of the total new housing loans, 10 percentage points higher than the long-term average. As this stimulus tapers off, there is a question of what sustains growth going forward, particularly if immigration takes several years to recover. There are also grave concerns that the momentum in the system is reigniting housing affordability issues, he said. Well, yeah, housing affordability is always an issue. I mean, if we look at here, we've got the average earnings are 1,713, but what we want to see are the median earnings. Hang on, let's see. So here are the median earnings for all industries. Where is that? I can find that here. Okay. Where's this? Accommodation and food. Well, here we have the median 50th percentile. I mean, have a look here, guys. You can see it's all industries at the median is at $1,100. You know, total weekly cash earnings. So what's that? You know, a bit over 50 grand, 55 grand. That's not much. It's not that much. And then remember, you got to pay tax on that. And super. Awesome. Oh no, probably the super's on top of that. Hopefully. Boy. So, no wonder housing is unaffordable when we look at some of the prices in these places. It's crazy. Even, you know, we looked at Sydney. You know, a 2-bed unit as a first home. Nearly $1 million. 55 grand a year. Couple. Be a, you know, tough stint. And I mean, if rates ever go up, if they'll even be able to increase rates, that's the question. So given the dramatic drop in immigration in the short term, housing supply is expected to exceed demand by almost 60,000 dwellings in Sydney, 70,000 in Melbourne across 21 and 22, with increased demand to soak up some of the supply beyond 2023, the State of the Nation's Housing 2020 report found. In Brisbane, NHFIC also expects supply to exceed demand across 2021 and 2022, but more modestly. In Perth and Adelaide, it expects housing demand to increase from 2021, but the supply to be relatively subdued, resulting in a negative net undersupply beyond 2022, putting upward pressure on rents and housing prices. The housing demand shock is large and unprecedented, with the biggest impact to be felt in the apartment and rental segments, the report said. But the larger growth of new housing demand is likely to be temporary from 2023 to 2025 on the back of a strengthening economy and return to normalization of Australia's migration program. New demand is expected to exceed supply. So here's the thing, everyone. If you're hoping that there'll be a long-term correction to the market, they're going to turn on the migration flood taps again. And I feel sorry for a lot of the people that are coming over here, particularly international students. When they come over here, being enticed with these courses. And I know people who have come over here, studied postgraduate courses, then had to go back home because there's no work opportunities here. You know, all these fancy courses, no opportunities. Our economy isn't complex enough. We want people to come over here, and if they study quite advanced skills, to be able to kind of work here, because then they can contribute to the nation at a much higher level. That's what you want, everyone. You know, that's the good thing. You win both ways. You pay to train them, and then you get them contributing. But in a way, it's a brain drain. Beyond 2023, demand is projected to modestly exceed supply as the construction industry begins to respond to the uptick in demand. This will result in Melbourne's supply-demand balance becoming negative. That is, there will be an undersupply of almost 16,000 dwellings for 2024 and an undersupply of almost 14,000 dwellings in Sydney for the same year, the report said. As a result, any downward pressure on rents and apartment prices in Melbourne and Sydney is expected to be short-lived. Despite an overall rebound in demand, the report predicts that demand and supply for apartments is not expected to revert to pre-crisis levels over the projected period in 2025. In 2025, demand for apartments is expected to be 2/3 of 2019 levels, while supply is expected to be almost half of pre-crisis levels, falling back to levels not seen since prior to the apartment boom. The NHFIC predicts demand for apartments will fall to about 16,200 dwellings in 2021 before gradually recovering to 31,700 in 2025, still well below the pre-crisis demand of 46,600 in 2019. When it comes to detached and medium-density housing, it is a different story, with NHFIC predicting that demand for detached and medium-density dwellings will recover to pre-crisis levels by 2024. The detached housing market is clearly responding to the fiscal and monetary stimulus, and we expect net additions to rise to 108,000 in 2021 and 90,000 in 2020, the report says. But the withdrawal of stimulus and a relatively weak population growth outlook means that by 2025, net new detached housing additions are likely to be only 97,000. In 2020, record low interest rates and government stimulus saw every capital city record sustained housing price growth, with the national median rising by 5.8%. The national unit market underperformed houses, with the national median price rising 0.9%, with very large variables across capital cities. And, well, that's 0.9%, that's inflation, guys. So if you bought that year, you didn't make any money on your property, particularly all of the costs involved in holding it and the cost making the transaction. So population shock, apartments to feel at the worst. What do you think? Are you at all surprised? And do you think they'll turn on the migration tap to get more people in the country, and rather than spreading people out, they'll just cram them into the same few cities? Maybe we need a regional rush, a regional land rush. Surely with the technology we could do it these days. What do you reckon? Anyway, guys, thank you for watching. Like, share, subscribe to the channel. Let me know your thoughts and opinions in the comments down below. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join the channel on YouTube or Patreon. You can support us using our affiliate links from Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. You can also join MeetRx or SelfWealth and support us that way. Take care, and I'll see you next time. Bye for now.